Wish you warm welcome to our digital meeting, and I am very happy to share that we have Janaki Ganesh from Chennai. She is ex-senior IT professional. She enrolled last year, November 2019, in our digital practical video learning coaching, and she has successfully completed 2 exams. First with 73% RPEV, and second exam IP 75% plus, exactly precise 83%. Congratulations, great job done, huh?
Thank you, sir.
So,
all because of your
yeah,
teaching only, sir.
Definitely, I did my best, and you did your best. Okay, by investing quality time, doing a practical application,
Yes.
so which help you to achieve this level. So, Janaki,
Right.
as you know that the objective of digital meeting is twin. One is that as you are aspiring independent professional, or you can say aspiring independent CFP practitioner. So this video will help you to when you share this video, when we'll upload this video and you share your friends, colleagues, relatives, so they can come to know about your new journey, your new competence. So that's how you can do a more practical application, and you can even charge a fixed fee for writing a comprehensive financial plan. And same time, those who are aspiring CFP aspirant, they can also basically have a motivation, inspirations of doing certification. Okay, there are many IT professional also looking for some kind of double domain expertise. Okay, or they are looking for some second career or part-time profession. So it will give a inspiration to them. So I request you can start with your introduction, and then we'll take it for a next 30 minutes our discussion.
Sure. Hi, my name is Janaki, and I'm from Chennai. I have been in the IT industry for a pretty long time, but there was a stagnant period when I was looking for a change. I just had brushed upon, because our projects were also around the fintech space, which is why I came to know about a little about this, financial planning. But I really didn't have an idea. I mean, just like how most of us salaried South Indian professionals are, if there is any surplus in the account, it always goes to a fixed deposit or buying a gold jewelry. So that's as much as our revenues are. I never really knew about the immense world of financial products that were available. So while I was researching, I came upon this course of CFP, and while I did enroll for this course, I couldn't get enough learning from any of those materials that were provided. And I guess it was just my sheer luck that I chanced upon a video of a similar IT professional who wanted to get rid of the rat race and start off something on his own, and that was a very inspiring journey. And that's how I stumbled upon Keyur, and I still would love to thank God that he showed me Keyur, because attending the video lectures has kind of given me something that I could look forward. Now I'm on a sabbatical break. I have taken a break from the IT industry, and I at this point of time I can't do a full-time job, but I was looking for something that I could. But you still don't want to stay at home, so you still want to do something, and this is a very gratifying job. You like to help people out, and in this space of finance, who doesn't need to plan for money? Everybody needs it at some point of time or the other. So which is why I joined Keyur Shah's classes, because with him only I think I understood the nuances of this entire industry, how this entire scheme of thing works, and a broad understanding of what financial products are available. So and I think it's just that he has done his best in his video lectures, and I think I have absorbed the best of it, and that's why the exams seemed like the second exam really seemed like a cakewalk for me. It was really easy for me to crack that exam. I have 3 more to go, but I'm looking forward to it, and hopefully by February 2021, I should be able to finish my CFP certification.
Good, very good. So I am very happy that you also invested your quality time for since last 1 year. Definitely 6 months was the lockdown and examination was not conducted. So you started late going for the examination, and I'm sure that by March 2021 you will complete your certification. So now, if we as you have completed almost one full year, 12-month journey, okay, in learning, okay. So now at this juncture, if you have to summarize one or two important key benefit, because end of the day, you having a family, if I'm right, your husband is entrepreneur, you have a son, having a nuclear family. So, last 1 year, when you started with the training, completed training, now you have completed two exams. So what are the key two, three important benefit you had in your personal life?
Right. So since I said the earlier, because I was not aware of any of these, investment space or the financial planning space at all. My investments were into only, insurance policies that were pitched to us as a product right before the time that you have to file your income tax returns. So only because I attended the classes that I actually went through the insurance policy documents and I understood that, insurance policy cannot be an investment vehicle. Insurance is supposed to be something that is a cover. In case something happens to you, that should be something that protects your family. Now, these insurance policies, which get sold to you specifically to salaried, those middle management groups, without thinking, we sign off so many documents without even reading, just because we want to save a few thousands on the tax that we pay. But that doesn't serve the purpose of either a proper life cover for the family, nor does it provide you enough returns to justify an investment in that claim. Because only if you go through the training, you understand that the insurance, most of the premiums that you pay go into managing the insurance company. Very small portion of it actually goes into your investments, and the way they manage the investments is they're not an investment company. So that's one of the major benefits that I have gone through personally. And I have, kind of constructed or rather restructured my financial plan for the family. Yeah, that's one. Two is, understanding the need of how to generate a retirement corpus, because that's something that I really learned. Because even if you're not able to save up enough for your child's education, you can always borrow. There are enough number of banks who are willing to give educational loans to fund your children's education. But retirement is something that is grossly neglected in a country like India, where we don't have enough social security. So what happens in your golden years of life when you want to live a peaceful life is when you are burdened with the hassle of leading the lifestyle that you were leading while you were earning. So it's very important for everybody. I mean, especially the salaried, the class of people, to generate a corpus enough for you to. I'm not saying that you should leave behind a big estate for your family, but just enough for you to survive your, the golden years, so that you enjoy a peaceful golden era. So that is, those are the two key things that I have learned and implemented in my life as well.
Good, very good, excellent. And I'm very happy that she has prepared her comprehensive financial plan and she is going to present for 10 minutes. So when this video is shared by Janaki to you as a friend, colleague, relative, or even you are a YouTube subscriber, and if you feel that you want to hire a Janaki, okay, to construct your comprehensive financial plan, I have shared her email ID and mobile number. You can connect her to construct the financial plan. So let I share the screen. Yes, Janki.
Yeah. So I have made a comprehensive financial plan for my own family because I think that was the best way to start implementing whatever I have learned. And yeah, so we have a very small family, just my husband, me, and my son. My husband is 41, I'm 40, and my son is 10 years old. Um, okay, just a small brief on the goals that we had. So we sat together, me and my husband, and we discussed the goals that we would like to achieve in the next 10 years, 20 years. So the most important one came up to be my child's higher education and our retirement purpose. Uh, so since my child is not really aspiring to go into a medical or an engineering background, I have only kept the current cost as 10 lakhs because he's not very sure of what he would want to do, but he's very sure that he doesn't want to do medical or engineering. So which is why I've kept the current cost as 10 lakhs for the entire graduation. If he wants to do an MBA or something post his graduation, we shall look into it maybe a couple of years after now, so that he also has an idea. The second goal, a very important goal that we have really worked on is our retirement corpus. Like I said, we just want enough money to enable us sustain the same lifestyle that we have right now. The third important thing is insurance planning. Suppose something untoward happens to Ganesh, or who is the breadwinner of the family, what happens to the family? That's very, very critical in insurance planning, which is what we have planned. And fourth, health insurance planning. I mean, the current circumstances itself are a condition that really makes health insurance very, very important for us going forward. And we are in that middle age right now, and you never know when you can fall sick. So we have got a health insurance plan for the family. And now vacation planning for us, it's not really a need because we are really not living a flamboyant lifestyle. We keep it very simple. But if possible, we would like to go for an abroad trip if our age and our income allows us. We will definitely go for it. So the current cost estimated for that is about 6 lakhs. So that's not a need; it's a want that we would like to do. Uh, just a small outlook of our assets and liabilities. So we have our own self-occupied house. There's no incumbent loan on it. We have finished paying off all the loans. We have a car, and we have some gold ornaments. Which is, I mean, I think every South Indian family would have some substantial gold with them. Uh, PPF, I mean, that's one important investment that I have started only because I attended Keyur's video lectures. I think that only really opened an eye to an important investment vehicle of PPF because it really helps you build significant wealth for your whatever goal. It needn't be retirement, but it could be for any other goal as well. And the most important thing is it's tax free. It's the only vehicle probably which is triple E. So I mean, thanks to Keyur sir for that
It's
exciting
my
note
pleasure.
on PPF. Yes. Like I said, the insurances that we had was predominantly something that we had taken only for some tax saving purpose. So we kind of restructured our entire insurance portfolio to and whatever policies were just lying around without any adding any value and just keeping on the premium and ensuring that we don't lose too much of a surrender value, we kind of restructure and we just have maybe two or three policies which are running, which is which may mature in the coming 5 6 years. So that's the insurance that we have. Um, Again, we had some capital gain because we had some property in the native which we sold. So, I mean, again, due to Keyur's classes is when we realized that we need to have some financial assets, something that keeps growing. So, which is why we started off with mutual funds. never before has this family even heard of this term of mutual funds. So this is our very first investment into it. So we have some equity mutual funds and one debt mutual fund which is going on, and we have some the usual amount that we keep in the bank account for making any contingencies. So liabilities, we don't have too many loans. We have kind of paid off everything. We just have a car loan. So that's also going to end next year. So we didn't have to do too much of a debt planning here, but if there was a case, then I was very prepared to even handle the debt planning as well. But our family doesn't require it as of now. So yeah, the cash flows, we have a monthly household expense of about 30,000, excluding the EMI. As we live a very, minimalistic lifestyle, I would say. And then the family currently has moved from a double income to a single income household. So we have a monthly surplus about 35K. The variance being due to my husband being into business, we don't have a standard income that comes in every month, but it can, the surplus can vary about 35,000. We have some other business plans also in place, which we expect that the income should grow by end of next year.
Good. So I am very happy that you implemented this learning in spirit and started PPF account. Basically, second, you have started the equity and debt mutual fund, created a contingency fund. Okay, even achieve the debt freedom by surrendering the life insurance policy.
Yes.
Good, very good. So I'm sure that this will be a good inspiration for potential investor. Yes, this is the something one has implemented. Okay, and if you follow same journey, you can also achieve a debt freedom and plan for your goals. Yes,
Right.
Janaki, you can start with children's higher education plan.
Yeah. So the first goal being the child's higher education. The current cost is 10 lakhs, assuming that he will finish his class 12 in next 8 years, and assuming an inflation rate of 8%. Generally, the education sector faces a slightly higher inflation rate than the general economy, so which is why I've capped the inflation at 8%. So expect the 10 lakhs is going to grow up to 18.5 lakhs by the time he is ready for college. So since this is not really long term, 8 years is going to be pretty short. What I have done is I can't, play too much around with the existing equity fund. So what we decided was to allocate our debt fund, rather earmark our debt fund to the goal. So the 1,50,000 which we had invested in the debt fund, I had earmarked it for my son's education, which will grow up to about 2.5 lakhs by the time he needs that. And the balance, I have to achieve it only through my monthly SIP. So we will be starting off with a monthly SIP for my son's education. Again, here, because if I just invest in debt right from now, I may not be able to generate enough corpus to fund his entire education. At the same time, I can't take the risk of keeping the entire fund in equity all this while. So I think optimizing the risk versus return is something, again, it's one of those golden learnings that I have learned from Keyur, sir. So we plan to use the first 7 years in equity and shift the entire fund to a debt in the last 1 year, so that it avoids any unnecessary vagaries of the equity. So while we use equity as a mode to appreciate the capital, we will use debt as something that will kind of book the profits and allow us to relax and withdraw in peace while he needs the funds. So that's the plan. So assuming all of this 18.5 lakhs that I would need, 2.5 lakhs is going to come from the debt fund that we have already earmarked. The remaining 16 lakhs is what I expect to generate through this monthly SIP. So keeping this 7 years in equity and last 1 year in debt, I would need to start off on a monthly SIP of 10,600 rupees, which is feasible at this point of time because we have a surplus which accommodates that. Yeah.
Good, very good.
Okay. So the monthly, okay, the second goal is the retirement corpus, where we have a monthly household expense of 30,000, and we expect to live the same lifestyle even in our post-retirement. And there's not too much of a age difference between me and my husband, so like we expect, us to we would survive about 85 years of age. So put together, we have about, assuming that we retire by 60, we have about 26 years of post-retirement that we have to look forward to, and we just have 19 years more in our active accumulation phase. So just imagine the stress that we have of lower number of years to generate funds which should survive us through this 26 years. So yeah, so I'll tell you what we have done to manage this as well. So if we had to do, generally what people do is the retirement corpus because they don't want to take too much of a risk. They prefer to keep it in a debt fund, which might probably give a CAGR of 7%. Having said that, to assume this 30,000, obviously 19 years from now, this 30,000 is going to be, I think, at least a lakh and 4,000 per month that we would require and would still keep growing in those 26 years of post-retirement period. So put together the corpus requirement that we would have needed in case we had just kept the corpus in debt fund post-retirement, I would have needed about 2.5 crores. But because of the strategy that we learned at Keyur's class was the bucket strategy, wherein we divide the post-retirement period into chunks of blocks of periods of at least 5-6 years, so that you break the requirement into smaller blocks and you try to optimize the risk versus return and try and bring down the retirement corpus requirement. So that really helps because otherwise, what might seem an unachievable target can actually become achievable if you actually break this into. So by doing a bucket strategy, you actually produce a return of about 8.85%, which is 1.85% more. And that really makes a significant difference because your corpus, what I had required of a 2.5 crores, has come down to about 2 crores. So, even a 51 lakhs difference can make such a big difference to your, retirement corpus because I have started very late in my journey of accumulating this. So every penny counts. Everything that I can do to ensure that we live comfortably through the life is very important for us. So which is why this bucket strategy has been really helpful. Okay, so having put the bucket strategy, I have brought down the retirement corpus to about 2 crores. And I am allocating my existing equity fund and my PPF account to the retirement corpus. So both of them together are going to fetch the 1 crores out of this 2 crores requirement. And I would just need to generate this 1 crore, which I want to achieve through my monthly SIP. So again, in the pre-retirement period, I have tried at implemented an asset allocation and rebalancing strategy, which again plays around, assuming that you appreciate the capital through equity vehicles and also slowly rebalance it towards debt towards the end of the accumulation phase, so that you let the capital appreciate. At the same time, you also keep shifting the extra surpluses that you have generated towards safer avenues, which is something I think Keyur sir has drilled into our heads so strongly that even in the middle of the night, if you wake me up, I would be able to do an asset allocation and rebalancing with confidence. Yeah. So keeping all of that of more focus on equity towards the start of the accumulation and shifting towards the debt. So with that asset allocation rebalancing, I think still I needed to do a SIP of 16,000 per month. Now, considering the insurance premiums and my child's plan, I was not sure if I would be able to generate the 16,000 every month, which is why I thought I should bring it down further so that it's still feasible for me to generate this corpus, which is possible only if I do a growing SIP. Like I said, right now we are on a single income family, but we are planning to include more and more uh, business deals in place. So, which is why I think maybe if not now, then in the future I will definitely be able to increase the SIP. So maybe I'll start off slow and then keep increasing the SIP amount, which is why we got a growing SIP, and I have managed to bring down the SIP requirement to less than 10,000, which is feasible for us to go at this point of time.
Good, excellent, excellent.
Last but very important piece of it is the insurance planning. Like I said, insurance should be purely insurance. It cannot be an investment vehicle. So it is very important for families like us which survive on a person's income. So there should definitely be something that would take care of the family in case of an uneventful happening. So which is why we have calculated the corpus that we would require, assuming that we have the same lifestyle, assuming that we have to fund for our education expenses of my son, and just a reserve of 10 lakhs just in case something else pops up. So which is why he wanted a corpus of about 1.5 crores, and decided to take a term plan for 1.5 crores.
Good.
So don't fall for those ads which keep saying 1 crore term plan at this date. Oh, it's your birthday coming around the corner. So don't fall for those ads. Please calculate what you really need for the family and then take a term plan.
Good. And here I would like to add one point also for benefit of viewer. Okay, ideally term plan must be till age of retirement, because Janaki has prepared a retirement plan. So at age of 60, she is going to have a 2 crore rupees corpus. So term life plan is not required post retirement. And secondly, again, one should not go for a return of premium plan. Okay, because when you opt for return of premium plan, then the cost of term plan would be 2 times or 3 times. Okay, because they have to return the premium. So ideally one should go with the vanilla plan. Definitely once you connect with Janaki and when she will construct the financial plan for you, she will take care of all these aspects when she prepare a customized comprehensive financial plan for you. Yes, Janaki.
Yeah. And health insurance, I think much has been said about this thing, that every family needs a health insurance plan, preferably an individual plan. But even if you're not able to go for an individual plan for every member in the family, get a floater plan. I mean, I actually didn't know about these terms if you had spoken to me a year back, but now I'm very confident of what a floater plan is, what kind of insurance plans that you should take for taking care of your health, what gets covered, what doesn't get covered in any kind of a health insurance plan. So we plan to take a floater policy for 15 lakhs, which will cover all the family members. Yeah. The last plan is the vacation planning. So for now, we have, this is where I think it's prudence which wins over, that we don't want to uh, suffocate ourselves at this point of time, because we don't have enough surplus to create funds for the vacation as of now. But maybe next year, after assessing our increase in income, we shall revisit this goal.
She has prepared an excellent plan for herself from her CFP learning. Okay, So she is competent to prepare your comprehensive financial wellness plan. You have two options at this juncture. One, if you invest 1,000, 1,200, 1,200 hours of time, okay, what she invested in the last 10 to 12 months, average 100 hours per month, and approximately total 2 lakh rupees money, then you can enroll with me if you're looking for some kind of part-time career or maybe a full-time career. And if you wish, Janki can also assist if she is available as a co-mentor. Okay. Or if you feel that investing a 1,200 hours of time, investing a 2 lakh rupees money is difficult, and you want some shortcut solution, I can say that as an investor, okay, when you pay a 25, 30,000 rupees to Janki, she can invest her 25 to 30 hours of precious time, okay, and she can construct the comprehensive financial plan, okay, and then every year you can review with her where she can charge 15,000 for reviewing the financial plan you have decided to complete, or you are going to complete your certification journey by February or latest by March. So if I ask
Right.
you, okay, what are the next 1 or 3 years future plan you have in your mind?
Right, sir. So, like I said, I started on this journey first to correct the mistakes that I had done in my financial planning. So I'm pretty much done with that. So next plans for 1 to 3 years is I want to do an independent practice and try and influence families like me. I'm sure there are plenty of people like me who need help, uh, may not be able to invest time as much as I could, because my situation was different. I could afford to put in that time and effort to learn something new, even at substantially late in life. But I can definitely help people put together their financial plans. So my goal is that at least in the next 1 to 3 years, influence 25 other families like me. Um, and basically help them live a peaceful life. That is what I think, more than the money aspect of it, I want to be really there to help out people achieve their dreams through financial planning.
Good.
Yeah.
I'm sure that
Financial coach is what I want to be.
yes, yes. So way you have learned and implemented in your life. So India needs qualified and experienced people who basically learn the personal finance and be a personal finance coach to their family, friends, colleague, or potential investor. Okay, and help them to basically prepare their comprehensive financial plan so they benefited, and definitely once they benefited, you are going to benefit as a independent financial planner. Okay, and
Right,
today
yeah.
we know that IT is one of the fastest growing industry, but we have seen that one at age of 40, 45 plus, okay, ideally it is a retirement age for the IT
Right,
professionals, and they have to look for
right,
some
right.
second career option. Okay, so what is the one message you would like to give to a young IT professional, those who are in age of 20, 30s, okay, to better manage their better manage their personal finance, as well as uh, post 40, how they can create a second career option for themselves?
Sure. See, IT is a fast growing field, but you also need to keep your learning also equally aggressive, because there's no end to learning there.
Hmm.
So very often, people when they kind of reach the middle management level, the careers get stagnant at that point of time. There is not too much of a growth. So it's best, I think, to all the IT professionals, it's best to start early. Please start creating a second income source right from, I think, the day when you start taking your first salary is when you should have started investing in something, so that you don't really need to be, when you really feel like leaving the rat race and starting something on your own, you should be able to do that. You shouldn't be dependent on your salary income, even while you are in your middle management, and that time it becomes even more difficult for you to find a new job.
Hmm.
Every other day you hear about some friend or a relative who has lost a job in IT these days. So it's very difficult times to go through. So which is why it's always nice to have a second. I mean, I'm not saying everybody loses their job. I'm saying just in case you happen to be the unlucky, unfortunate condition, you should be ready to pick on something new. Uh, and it's best to have a second income already in place. That really helps. I mean, that financial security, I think that really helps in taking your career to a new dimension.
Good. And again, advantage to young IT professional is twin. Okay, one, okay, if IT professional, those who are in age of 20s, 30, if they learn personal finance skill, so which can helpful also in basically getting a better opportunity, because we know that banking and financial service sector across the world, it is one of the biggest user of IT. Okay, and we know fintech or robo advisory. So we know that a financial service sector is the biggest user of the IT services. So if you have a personal finance knowledge in place, so you would be able to better help your client. So your double domain expertise will help you to better code, better service your clients. So you get a better increment or better earning as IT professional if you are catering to a BFSI industry. Okay, or even after you can switch into a BSFI sector kind of profile. Second is that when you learn a personal
I would also like to add a point here, sir, about fintech. So the fintech space right now is pretty much dominated by the payments thing. There's not enough enough apps or enough tech that is being generated around investments. I mean, there are apps which help you manage your investments, etc. But there is still that needs to be a lot to be done in evangelizing this entire platform. So there is still a lot that can be done in the fintech space itself, using personal finance as a tool. This can be taken to a larger audience because of fintech. So I think it can be a good culmination of an IT and personal financial, because you can be a subject matter expert in the personal finance, and I'm sure you're already an expert in your IT domain. So you can club both these expertise together and generate something really exciting for this space. So there's a lot of work that needs to be done.
And again, second is that when you learn personal finance, you know what are your goals, you know what is the per month investment required. So automatically you will be a less spender. And when you spend less, you are saving more. So end of the day, financial education help you to spend less and save more for your future. So if Janaki could started 10 years before her CFP, I can bet you she must be having a 1 crore plus corpus today.
Yes, because, sir, definitely, sir.
Because income is always there, but because of that lack of financial education prompt us to spend more. Okay, or maybe because of lack of financial education, we invested into some asset class which were not productive, maybe into real estate or maybe into insurance policy. So we can say investment mistake. But if we is that yes, it is going to helpful more early you learn, you are going to benefit as a investor or as a professional. Good. So I'm sure that those who are the IT professional or those who are the software engineers, they can get a double advantage. One is to get a better career opportunity in BFSI space or fintech into fintech space, or even if they find to leave their full-time job, they can be ready for second career planning in their age of 40, 45, or even they can start something part-time, because many of time, if you are working 5 days a week, so you first year you invest your time in learning, and second year you invest same 20, 25 hours per week in creating a second income as a independent professional. And it is not necessary that you need to do only a distribution business. Today, qualified and excellent professional can be a fee-only financial planner. So fee-only financial planner means you write a financial plan and charge a fixed fee. Okay, so it is like a financial wellness coach.
Hmm.
Okay, good. So I'm sure that this discussion will help many young IT professional to take a right decision about their future plan. Okay, to conclude this discussion, okay, so what is the one important key message you would like to give the investor community? You are also 1 year before investor, today also you are investor. Okay, so what are the one or two important key message you would like to give?
Yeah, so don't invest just for the sake of investing. Always decide what you want to do. I mean, there should be a goal, and you only are you going to use investment as a vehicle to reach the goal. Just random investments here and there doesn't really make any sense at the end of the day. You might end up with having 100 mutual funds in your portfolio, but going nowhere with it, and it becomes very difficult to manage all on that. So I think before the next person is some distributor or an insurance advisor comes to you with the product, understand what is he offering you. You first understand what you really want to do with that, that tool, and then take a call on it. Don't blindly believe whatever the person says, because at the end of the day, he is a salesperson. He is pitching a product, but you should be aware, and for that you always need, if you don't feel confident enough to take this call on your own, please take an advice from somebody who's competent enough to do it, who's certified, who has the necessary qualifications and the experience to do this kind of an advice. So if you're not able to do it on your own, please take a proper advice and then take a call.
Good, very good. So I just thought that uh, being a working woman, you had almost 15, 16 years working woman, and then you took a sabbatical break. And during this sabbatical break, you started the CFP journey. And post CFP, you are from moving from a salaried working woman to a independent working woman or independent professional. So today, just I'm diverse diverting our discussion on different line. In our country, I have seen that 50% young woman, okay, specifically married woman, uh, because of any reason they are not doing any activity, okay, and typically we call it a housewife. Okay, that 50% I can say out of 10, 5 women are educated. Okay, they might be living in metro, mini metro. Okay, they are educated, qualified. Even post pre-marriage, and before marriage, they might be a working also, but post marriage, uh, within 2 3 years, in 30s, their 40s, they have stopped working, and today they are a housewife. Okay, so what is the one message you would like to give to that 50% woman? They are housewife, because they are not active. So what kind of the losses they have, because when you are not working, you might be spending more time for some other activities which end up with the more expenses, again unproductive activity. So what is the one message you would like to give to the housewife woman category, and how you want to inspire to do something for better their family?
Sure. I think for the housewives, I think I would just like to tell them that they are the ones, they are the anchors of the family. So, really speaking, they need to play a very important role uh, in the way the family is going to grow, and that's really in their hands. So instead of idling away their time and probably watching something on the TV, they can spend at least some amount of time and at least getting to know about what is there. They kind of shy away from this entire world of finance or investment, anything. Oh, share market, ye mere se nahi hoga. Mutual fund, I don't understand this. Some of them don't even know what the husband makes, or how much is there in the bank balance. Will it be enough to survive, a contingency like this? So I think Corona has been really an eye opener for a lot of people, because now they know what really the spouses do. But I think it's very important for any woman to be very independent, especially in the area of finance, because I think they are the ones who are the pillars of the family, and rightfully so. I think it's not difficult. If I could learn something at this age and try and bring this change to the family, so can anybody. I mean, it's not rocket science, but I think you should invest some amount of time every day to read up on something and use that learning. In case you don't understand, seek. There are a lot of enough and more content available on the net that will help you learn these products, learn what is necessary, what is not necessary. You need to understand what is a need, what is a want, why you need to spend on something, why you shouldn't spend on something. So I think that's very important for all homemakers out there. I think they should learn uh, this piece especially, and they should know the financial circumstances of the family. Only that would allow them to cut down any of these expenses, which they would be doing probably unknowingly. They might be spending it on the kitty party or whatever the case may be. I'm not saying everybody is doing that, but I think saving before spending is something that they should really learn.
Good, very good. So I also always uh, in a favor or have a thought process that every woman must have their independent identity. So whether you work full time or work independent part time or full time, but if you create some identity, okay, and today we know that digital technology is there. So earlier it was a thought that, okay, I'm in small town, how can I learn? Okay, whatever someone want to learn, but thanks to the digital technology, if you have most of the family has a smartphone and internet connection, and so you can learn through YouTube channel. There are a lot of free videos are available. In any someone want to even become a fitness expert, okay, someone has lost the weight. From example, one lady lost her weight from 80 to 60, and she decided to become a fitness or nutrition. So today's certification is later part, but first if you learn all these thing, and then if you get a relevant certification which will help you to get it into the that kind of profession. And again, thanks to digital technology, you learn also digitally, and you can educate someone who want to learn also digitally. So as I understood, COVID was the catastrophic event for a short term, okay, but it basically gave a you can say many benefits in a long term. Today, last year I could not think, okay, we can connect digitally, and we can have some kind of learning session or discussion online, okay. And this year, because of COVID, we encountered a lockdown, and which basically created many new way of working. Today, many of clients are preferring to have a digital meeting instead of physical meeting because of this COVID restriction, or maybe now they are educated. One can do all these things digitally, then there is no need of meeting physically.
Right.
Advantage is that with help of digital technology, you can live anywhere in the world. If today anyone who is watching the video, when Janaki will share this video to her friend, family, colleagues, okay, ex-colleague, and someone like the video, or someone decide to go ahead with Janaki, he or she might be anywhere in the world. So Janaki can construct the comprehensive financial plan without any kind of any hindrances. Okay.
Right.
But that thought was not there last year.
Available. Right.
Because maybe technology might be there, but because of we are so engaged in physical activity, okay, so we thought that not possible. So that is the advantage of this catastrophic event. So I thank you very much, Janaki, for coming on a digital platform, accepting my request, and coming on digital platform, sharing her success story, okay, shared her financial wellness plan, how she has transformed from a with how she has transformed with help of the financial education, which helped to plan her family finance. And now I'm sure that you are more confident and more control of your financial life today. So
Yes, definitely.
what is the level of that control? If I control and confidence, if last year it was a X, and if this year we can say 2X, that's how much it is.
10x, 10x.
10x. So that's the beauty of the finance, because we know that many of time we see many unforeseen events like suicide in the family, or maybe some kind of relationship dispute or divorce or whatever you call in the family. So 50% plus the beginning was because of financial problem. And why financial problem? Because of lack of financial education. Okay, so I request all these viewer, in case if you want to construct your comprehensive financial plan, in description I have shared the link, I have shared the mobile number and email ID, so you can connect with Janaki to construct your financial plan. She will decide the particular amount of fee between 15,000 to 30,000 based on the time investment is required, and she can construct the beautiful plan for you, for your customized need and wants. And she will invest approximately 20-30 hours time in a year to educate and transform your financial life to on a track. Okay, and in case if anyone is interested to learn, okay, then you can connect me or Janki also to start your CFP learning journey. So I thank you very much once again for coming on digital platform and sharing your
My
story.
pleasure, sir.
Thank
My
you very
pleasure.
much.